Hi, Josh Barker with Josh Barker Real Estate, and thank you for checking out our market update for the month of February 2024. Let's go ahead and kick off that sales report for the multiple listing service. The first thing to look at is our sold listings. Last month on the multiple listing service, and I'll circle this for you in red, there was 162 properties that closed escrow. If you go back 1 year ago, it was approximately 155 properties that had closed escrow. So our closings have gone up by about 4.5% over the year. The next thing to look at is just our pending home sales. Right now, there's approximately 202 properties that are currently in escrow as of the end of January. If you go back 1 year ago, the pending inventory was roughly 151. So again, positive numbers, 33% increase in pendings year over year, which is a good jump from what we've seen in some of our more previous market updates. The next thing to look at is just our active inventory. Active inventory right now is averaging around 560 homes for sale. If you go back 1 year ago, it was 634 properties for sale. So inventory overall, active inventory is down by approximately 11% year over year. And that's also ringing true in the city of Reading. City of Reading seeing home inventories that are some of the lowest that we've seen in many, many years. The next thing to look at is just the number of new listings coming to market. Here's a positive sign. Right now, there's 264 properties that came to market in the month of January. Now that is up roughly 21% compared to last year when there was only 218 properties that came to sell. So if this trend continues, for some of you home buyers that are out there waiting for homes to show up for sale, the numbers are starting to trend in the right direction, which is good news, of course, for everybody. Next thing to discuss is just new construction. Right now in the market, we have the report from January through all the way through December from the city of Reading, and they finished at 94 new permits pulled for new construction in the city of Reading. Now that's down a pretty big eye-catching 59% compared to last year when there was 232 properties over the year 2022 new construction permits pulled. So that's down quite a bit. Not a huge surprise though. We've been talking about this on some of our previous reports. Contractors right now are really focused on finishing up some of the existing projects they're working on, and they're cautiously optimistic that we could maybe get some appreciation in the market, making it a little bit easier for them to build some homes that buyers could afford to purchase. Next thing let's look at just briefly is the rental market. The rental market is changing just a little bit. A few months back, we were saying that vacancy rates were averaging around 6%. Some of our more recent reports now, or people are telling us it's between 6 and 8%. So it's trending in that direction. The vacation rental market is definitely still has softened a little bit. So the exception to that though is that if you have a unique niche property or really popular location or just a unique property overall, those are tending to rent out pretty well. But some of those infill types of VRBOs that are kind of inside of subdivisions that may not be as exciting, if you will, that's where we're starting to see a higher vacancy in those types of properties. Next thing to look at is just foreclosures. Right now, we use a product called Foreclosure Radar, and it gives us some insight onto foreclosure activity. Right now, it's reporting that there's 181 single-family residences that are in some form of foreclosure in the entire Shasta County. Over the years, we've watched this, and even if 30% of those actually made it to foreclosure, meaning that they went all the way through to a courthouse sale, that number is going to be so small, and because of the inventories being so low right now, they would just be welcome to the market and absorbed quickly. So it's not anything to be alarmed about. It's certainly not a large building that's about to fall on anybody, so it's not something we have to be too concerned about right now. Insurance is still a big issue. Right now, we've changed a few things on how we're communicating with our clients once they go into escrow. Right up front, we're telling everybody, start your insurance work immediately. In some cases, it's taking weeks to get that binder. And it could delay closings. And so right now you have a pretty challenging insurance environment due to some overregulation by the state. Insurance companies are really being more difficult with working out insurance policies, and the cost, obviously, as I've said in previous reports, has gone up. So don't get caught flat-footed on that one. Make sure you're checking it out. The last thing to talk about is just the home price expectations going forward. About a week and a half, 2 weeks ago, we had a report that came out by CBS, and it stated that they did 20, CoreLogic, the company, did an analysis on all the cities across the U.S., and they determined that the top 20 cities that the appreciation could take place, they targeted Reading as the number one. And they said it would be about 7.5% or 7.3% is what they had projected. There was some excitement in the local market when they saw that report. It's always good news to see your city pop up on the top of a list for home appreciation expectation. but this honestly isn't a surprise. We've talked about this in some of our previous reports. The Federal Reserve came out and stated just a few weeks ago that they expect to drop their interest rates 3 separate times in 2024. Now, if they do that, typically, if the last time as they were raising it 1/4 basis point at a time. So if they were to drop it 1/4 base at a time, that would mean that over the course of the year, it's going to drop 0.75% is the interest rate drop. Now, let me tie this together for you. For every 1% that the interest rate goes up or down, it has an impact on purchasing power by up to 10%. So if 0.75% the interest rate goes down over the course of the year, that's why prices would easily go up by the same 0.75%, especially in a town like Reading where our home inventory is so low. So you might be asking, what's the wild card here? Well, the wild card is what will happen with the active inventory. If our inventory grows quickly, then we may not receive that same level of appreciation. But over the course of this year, if inventory remains fairly tight like it is now, and interest rates drop, that expectation came out by CoreLogic is most likely to be accurate. So in any case, if you have any other questions, just know we're always here to help. I want to thank you all for taking your time to watch this today. Have a great day.